Namaste, good morning. A session where we complete IFOS uh, in its full form and walk forward to other arenas. In IFOS, we understand what is IFOS on a holistic manner. That is, a receipt which is regarded as income and receipt which is considered as income, which is not specifically exempt in section 10, which is not taxable under the other four heads, shall be taxable under this head, is the prime basis of charge of this particular section. Having said that, we know that this is a residuary section taxing all the etc. items, but there is a list available also. We saw dividend as the first item. All types of dividends are taxable in the hands of the shareholder, that is the recipient. I will only allow interest as expenditure, that is interest on loan taken for the purpose of investing in that shares. That will be claimed as expenditure, and it is also restricted to 20% of total dividend receipt. Okay, right. And then we moved on to deemed dividend as a concept. In that 222E is the major section, loan or advance received from a company in which public are not substantially interested, that is a closely held or unlisted company, by a substantial interest holder or a HUA firm, AOP, BOI, in which such substantial interest holder is also a substantial interest holder, or any relative on behalf of, for the benefit of such substantial interest holder, is taxable in the hands of the substantial interest holder. And the term substantial here means 10%. However, there are two exceptions in this rule. If the company does not have profits, then because company law says dividend can be distributed only out of profits. If there is no profit, no dividend. And the second biggest benefit is if the company's main business, substantial part of the business is lending, and it has lent in the normal course. The third exception, which is unsaid, which we understood in the case laws, are trade advances will not be considered. Then I asked you to remember Pradeep Kumar Malhotra and Veer Vikram Ved case. Okay, and Parle Plastics for substantial part of business. Okay, so this is the major head, and now comes smaller heads. There are only two major heads. One is gift, another is gift. We will wait. Next is winnings from lotteries, crossword puzzles, horse race, card games, and games of any other sort. All the reality shows, all types of games, etc. We call it as casual income. Section 115 BB. Whenever I use the word 115, section 115, did I ask you to remember something?
Tax is inherent on that.
So I asked you to remember these are charging sections. Whenever the law uses the section 115, the rate will be, as our friend was saying, the rate will be inherent in the section. At what rate it is taxable? So far, we have seen three charging sections. 111A, STCG on which STT is paid is taxable at 15%. 112 LTCG is taxable at 20%. 112A LTCG on which STT is paid is taxable at 10%. These are charging section and all those things which are said in 115. If I use 115, you can close your eyes and say I am speaking about a charging section. Section 115 BB provides that these are taxable at 30%. These are taxable at 30%. And you cannot claim expenses or losses. You cannot claim expenses or losses against us. And when the net amount is given, you need to gross up and tax. Grossing up is equal to amount received into 100 by 70 because rate of tax is 30. So divided by 70. And remember, even in winnings in kind will be taxable. Winnings in kind will also be taxable. We will see it in TDS chapter when you are looking at section 194B, where they have provisions for winnings in kind. Winnings in kind is also taxable. The fair market value will be considered. The fair market value will be considered. Now, there was a very popular question, a popular case law, Manju and Co. A lottery dealer for whom lottery tickets are stock in trade wins. A lottery dealer wins. Should it be treated as business income or is it IFOS? Because for him it is stock in trade which has fetched the money. But court has ruled out no, it is winnings only. The nature of receipt is different. And winnings of prize money on unsold lottery ticket held by the distributor be assessed as business income and be subjected to normal rates of tax instead of 115 BB. The receipt of prize money is not in the capacity of the lottery distributor but as a holder of the lottery ticket. The lottery department also does not treat it as business income, but instead treated as prize money and deducted tax under 194B. Hence, 115BB is applicable. Read through. Whatever may be the type of interest, whatever may be the type of interest, it will be chargeable under this chapter. Whatever may be the type of interest, it will be taxable under this charger, under this chapter. Now, what are all the types of interest? Leave alone. Interest earned by banks and financial institutions, those are taxable under PGBP. What is this chapter's heading says? That which is not taxable under other four heads. So any other interest received by a person whose main business is not lending is taxable here. Okay, that person's main business is not lending. It's not a bank or a finance organization, NBFC, etc. So for you, me, and majority of the companies, firms, etc., interest received from investment, from deposits, from loans provided are all taxable here. Repeating, interest from investments. Investments can be in debentures, bonds, government securities, other form of securities, or it can be on deposit, savings deposit, fixed deposit, recurring deposit, chit deposit, CGADS, all types of deposit, and loans provided. It can be personal loan, corporate loan, loan to a non-resident, anything are all taxable under this chapter. Interest on securities, debentures, bonds, deposits, loans, all types of investments are taxable in this chapter. Assessee has the option of disclosing such interest either on due basis or on accrual basis. Either the interest is taxable either on cash basis or accrual basis. Either on cash basis or on accrual basis. Interest is taxable either on cash basis or on accrual basis. To the best of my knowledge, this is a bookish provision. This is a bookish provision. Now, I will give you a couple of circumstances from your little practical experience also you can understand. I have made deposit, fixed deposit, 5-year fixed deposit with bank. I have made 5-year fixed deposit with bank. And I asked the bank to accumulate interest and pay me in the 5th year. So, if I am following cash basis of accounting, I will account the income only in year 5. But from the bank's perspective, shall I speak? Bank will deduct tax every year. Because on the flip side, for all business associates under section 193 and 194A, TDS on interest has to be deducted either on due basis or on receipt basis, whichever is earlier. Tax to be deducted on interest is either on due basis or on receipt basis, whichever is earlier. Now, imagine the circumstance. I want to account it only at the end of year 5, whereas the banker is going to deduct tax to me every year. So, we all know in 26 years, in my 26 years, the income will also be recorded, tax will also be recorded, and when I am presenting my return of accounts, there is a mismatch, return of income and 26 years, automatically notices are generated and it becomes a long process. Much more difficulties in the 5th year, I need to claim the TDS of all the 5 years because that is the year I am declaring income. So my claim of TDS will be higher, but what is reflected in 26 AS will be lower because that year's only will be reflected, all the more difficult. This mismatch is all the more difficult. For all assessees, this is a problem. Then let us look at companies does not have the income tax might give you the option that interest can be accounted for either on cash basis or on due basis, whichever is earlier. But for all companies, only accrual basis of accounting. Company law makes it mandatory. So, in my opinion, this is just a bookish provision. For namesake, we can have cash basis or due basis. By default, we are all forced to follow due basis of accounting. By default. Otherwise, the pain and cost of maintenance and proving to the department and reconciling becomes difficult. So instead of going through this cumbersome process, what people do, let me also record it on accrual basis. Let me not, that cash option is not available for companies, many other entities. For individuals only we are speaking. For individuals also, majority of the time there is a mismatch. So the provision is nice to read, but very difficult to follow. Very difficult to follow. And with 194 provisions, 194A provision saying that the threshold limit is 40,000 and 50,000. 40,000 for all assessees, 50,000 if the assessee is a senior citizen. If I accumulate, probably I will increase the threshold. So every year that there might be lesser. Considering all these factors totally in together, it is better, it is safer, it is easier to account it on accrual basis, even though you are an individual. So, the concept of due or accrual, it means due or receipt basis is nice to read but difficult to follow. So let's understand due basis is better. Expenses in the nature of collection charges, interest on loan taken for investment are allowed as deduction. Expenses in the nature of collection charges allowed as deduction. Interest on loan taken for the purpose of investment. Interest on loan taken for the purpose of investment, both are allowed as expenditure. Slowly, all the exemptions of interest are going on. As of now, remember, we will study in salary chapter also. Interest on PPF, RPF will not be taxable. Public Provident Fund, recognized Provident Fund. Previously, this post office monthly scheme, etc. Now they have taken it out. 80 TTA covers those deductions, etc. Okay. Imagine a circumstance like this. I have a taxable income of 12 lakhs. Okay, without interest. Interest accrued or received, okay, is another 3 lakhs. Another 3 lakhs. So this 3 lakhs is taxable at the rate of this 3 lakhs. Already my income is 12 lakhs. Another 3 lakhs accrues to me in the form of interest. This 3 lakhs will be taxable at the rate of this 3 lakhs will be taxable at 30%. Okay, because already my income has exceeded. Interest date is 31st March. So what I do is something like that. On 1st March, transfer the debentures or bonds to Ananya. On 1st March, what I do is I transfer the debentures or bonds to Ananya. Ananya does not have taxable income. Interest received is not taxable because it's only 3 lakhs. There is 87A rebate and so it will not be taxable. On 1st of May, okay, I reacquire the bonds from Ananya. I reacquire the bonds from Ananya. So what happens? I am trying to shift the interest alone to her, and after some time I get back the bonds. Okay, in income tax law, this is known as bond washing transactions. In income tax law, this is popularly known as bond washing transaction. Bond washing. I am trying to wash away my interest so that I'm escaping from the taxation net. Bond washing transactions. Actually, in the provision should have gone to clubbing chapter, but still. So the law says where I transfer the bonds or debentures and reacquire them, the interest accrued in the in-between period is not taxable in the hands of Ananya, that is the recipient. It is taxable in the hands of the transferor. Repeating, bond washing, where interest earning investments are transferred and reacquired, and the interest accrued in the in-between period shall not be taxable in the hands of the recipient, shall be taxable in the hands of the assessor. Where a person transfers security immediately before the due date of interest, and acquires back after the due date of interest, then the interest shall be taxable in the hands of the transferor. This is to avoid the practice of transferring security by higher income bracket people to the lower income group before the date of transfer, so that the interest gets taxable at lower rates. Law did not specify the time period, but normally what I understand is 90 days to 180 days. If you sell and buy within 90 days, then you have a problem.
சார் இப்போ இமிடியேட்டா ட்ரான்ஸ்ஃபர் பண்ணதுக்கு அப்புறம் திரும்ப ரீஎக்வயர் பண்ணனா இந்த இது டாக்ஸபிள் இல்லது எக்ஸம்ட் தானே உங்களுக்கு
ரீஎக்வயர் பண்ணலனா டாக்ஸபிள்
பட் வித் 90 டேஸ் குள்ள பண்ணா அது வந்து ட்ரான்ஸ்ஃபர் ஆகும் டாக்ஸ்
sometimes 180 days also 90 days is interpreted in 3 days okay days between transfer and reacquire. This is also an interpretation.
Okay.
90 days before interest and 90 days after.
Oh, okay.
Sir, what if it is a part of the speculative business? If this kind of transaction,
that is, if it is business, it is not at all covered under IFOS chapter. Don't worry.
okay.
Composite letting out of building, plant, machinery, and furniture. First, let me tell you about house property before going into this. Though this is much more larger, but before. What is composite rent? Rent for building plus amenities. Repeating, rent for building plus amenities. This is known as composite rent. We all know rent for house property is taxable in house property. Rent for amenities should be taxable under IFOS. Rent for house property, which is building, even if the house property is for commercial purpose also, okay, even if the property is used for commercial purpose also, rent for house building or house property is taxable in IHP, and other rents are taxable in IFOS.
So does this include the maintenance charges they receive?
Yes.
Okay.
However, where it is inseparable, 50,000 rent for all put together. Where it is inseparable, the whole is taxable under IFOS. The whole is taxable under IFOS. Okay.
சார் நம்ம ஸ்டாண்டர்ட் ரேட் கம்பேர் பண்ணி ஆக்சுவல் பில்டிங் குள்ள ரெண்ட் செப்பரேபிள் பண்ண முடியாது.
முடியாது. The actual rent, if it is not known, we cannot.
Okay.
And standard rent is a concept only in few states. Okay. So my dear friends, where it is inseparable, then it is fully taxable under IFOS. Second circumstance, which is now very popular. I am running my business. My business is a seasonal business. For the other part of the business, for the other part of the year, I don't want to keep my building, factory building, plant and machinery and all idle. So I let it out. Temporary basis. If it is permanently let out, then that becomes my business. On a temporary basis, I let it out. Due to suspension of activity, due to seasonal aspects, in those cases, it will come under IFOS. Remember that the basis of charge of this chapter, if it is not taxable under the other four heads, it will come and fall here. This is taxable under this chapter, provided it is not a business income. This is taxable if it is incidental, that is not the main activity. Where letting out of building is an inseparable part, then the same is taxable. Where building rent can be separately identified, then that is taxable in IHP. All expenses will be allowed, including depreciation. If there is no building, if it is only plant, machinery or furniture, obviously it is coming under IFOS, because we all know that only house property taxes, land and building, opportunity there too. All other types of interest are falling here. Read through. Rent are falling here.
Sir, one doubt, but it is more in house property than this chapter. Suppose a company has its own building and they're letting out one floor to a vendor to give juices and snacks. He's doing business there. Will this be taken as amenities, or will it be taken as
house property? Letting out of part of the building. That's what you are saying, right?
Yes, sir.
House property.
Okay, sir.
We all know about this. I have given you a small intro about this. Interest received on compensation or enhanced compensation, that is delay in payment of these things. Irrespective of the method of accounting, this is taxable only on receipt basis. Remember, irrespective of the method of accounting, I am going to tax it only on receipt basis. Standard deduction of 50%. Standard deduction of 50%. Okay, deduction of 50% of such interest will be provided. Okay, only standard deduction, that to 50%. Remember, it is only taxable in the year of receipt. No accrual principle here. Only in the compensation itself, we all know capital gain arises only in the year in which compensation is received. Similarly, interest is taxable only in the year in which it is received, not on accrual basis, and a standard deduction of 50% of such interest is provided.
So the compensation may come late, but interest on this compensation, it will anyway be received on time, no, sir?
If it is received on time, fine. But majority of the time, you need to go to the court to prove yourself and get the interest.
Okay, sir.
This is an interesting case. Okay, Malaviya Bhikhubai Balabai. Interest on enhanced compensation. Interest on enhanced compensation. Is it assessable under capital gain or IFOS? The law said that this is assessable under capital gain. The court said, assessee has received the interest under Land Acquisition Act, which represents enhanced value of the land, and so it partakes the character of compensation and not interest. Very rare case law. Okay, in this case they said that since it is computed as per Land Acquisition Act and not as per the normal interest or banking channels, banking rate of interest, it is computed under the provisions of Land Acquisition Act. So this interest is not actually interest. This is an enhanced compensation or type of compensation which is paid to the assessee. So it is taxable under capital gains. If these words appear, quote this section. Otherwise, interest on plain words of inner interest on compensation or enhanced compensation will be taxable only under IFOS. To an extent, I believe you can recollect this also. Advance money forfeited on or after 1st April 2014. Up to that date, it should be adjusted with the cost of the asset, cost of acquisition. From 1st April 2014, if you receive any advance money and the same is forfeited, it is taxable under IFOS. It is taxable under IFOS. Generally, income from subletting, directors' sitting fees, family pension, vacant land. This is rent of vacant land. Okay. Ground rent it's known as. Agriculture income from outside India, royalty, insurance, scheme insurance are all taxable under IFOS provided it is not taxable under other heads. Read through once before going into gift. Read through once. Let's understand some practical questions and then go to theoretical gift provisions. Question number 1. Mr. Santanam holding 25% of voting power of a private limited company. So look at the wordings. He is holding 25%. It is a private limited company. So the question asked will be more on deemed dividend. Permitted his own land to be mortgaged to the bank for enabling the company to obtain a loan. Mr. Santanam requested the company to release the property from the mortgage. The company failed to do so, but for retaining the benefit of bank loan, it gave an advance of 10 lakhs to Mr. Santanam, which was authorized by a board resolution. The company's accumulated profit on that day is 50 lakhs. Assessing officer proposes to tax the amount of 10 lakhs by invoking the provisions of 222E. Is the proportion or is the proportion of the assessing officer correct in law?
No, sir.
Why?
Because it's like pledging our own property and getting money. It is not a deemed income.
Not
Because
as convincing answer.
Sir, it is because the company has gained benefit out of it.
Okay.
Case law, there one case law.
That's what I want you to. That's what I want answer also, Venkatesh. The question is a direct relation to a case law. Adi Kumar Malhotra. The question is a direct relation to the case law. That is, in that case law, if you remember the judgment, okay, if you are getting any other benefit, okay, the director, High Court held Section 222E must be construed to mean advances or loans which a shareholder simply enjoys on account of beneficial ownership. Where the company gets any benefit and the loan or advance is given to enjoy or continue to enjoy such benefit, then it cannot be treated as deemed dividend. Then it cannot be treated as deemed dividend. So I'm just writing the citation so that you can refer the case law. Okay, I'm just writing the citation so that you can remember the case law. Dawal is in the business of manufacturing customized kitchen equipment. He is also the managing director and held nearly 65% of shares in a private limited company. That means they are coming to this provision. A substantial part of the business of Dawal is obtained through that private limited. For this purpose, the private limited passed on an advance received from its customer to Dawal to execute a job work entrusted to him. The assessing officer held that the advance money received by Dawal is in the nature of loan and accordingly is deemed dividend within the provisions of 222E. The assessing officer therefore made the addition by treating it as deemed dividend. Examine the action.
It's in the normal course of business, and
it partakes the character of trade advance. It partakes the character of trade advance. It is not a loan or advance in the technical sense of it. This is like advance paid to creditors, advance paid for execution of work. It partakes the character of trade advance. So it is not taxable. There are multiple case laws to this. You can quote Ambassador Tours and Travels as the famous case law, or you can quote directly the Creative Dyeing and Printing, Okay, where advances were made to a company, to a sister concern, adjusting against the dues of job work done. The famous is Ambassador Tours and Travels, okay, where trade advances will not be considered. This is a trade advance, okay. This loan is like a trade advance, okay. Which is a carrying on of business. You have the judgments also. You can quote the crux of the judgment as well. Question number 3. MNO Private Limited is a company in which public are not substantially interested. K is a shareholder of the company holding 15% equity shares. The accumulated profits of the company amounted to 10 lakh. The company lent 1 lakh by way of account payee check. The loan was not connected to the business of the company. K repaid the loan of the company by an account payee check. Examine the effect of borrowal and repayment. Don't worry about the year. It's again an examination question. Don't worry about the year. But the crux of that is the company has an accumulated profit and it lent loan to a substantial interest holder. The substantial interest holder repaid that loan within the year end. Examine. Is it taxable as deemed dividend in the hands of the substantial interest holder? Is it taxable as deemed dividend in the hands of the substantial interest holder? Nasira?
Sir, I think it is not considered as deemed dividend.
Because of the fact?
Because he repays the loan within 90 days or before filing the return date, before the return date. So it is not considered
within the
as
same year. You can keep it like that.
okay, within the same year. So it is not like a deemed dividend. It attracts the characters of loan.
Loan is only deemed dividend.
Sir, I think you have to pay only the interest portion which you would have paid to the bank, something like that.
Okay. There are only 2 exceptions to the provision of section 2 subsection 22 clause E. There are only 2 exceptions to the provision of 222E, where the company does not have accumulated profits. That is one exception, where substantial part of the business of the company is lending. Okay. Any other loan or advance, any other loan or advance provided to a substantial interest holder shall be treated as deemed dividend. Subsequent repayment or paying interest for the same will not change the character of the income. Subsequent repayment or paying interest will not change the character of the income in the given case, even though it is repaid within the end of the year, still the loan provided shall be treated as deemed dividend in the hands of the receiver. There are only two exceptions. Nowhere the law says that subsequent repayment. Suppose if Venkatesh was saying, sir, yes, repaid. So can we give the exemption? If I provide the exemption, what happens is every 1st April you will take the loan, every 31st March you will close the loan. That is how it will happen if you provide that benefit. So the law closes that gate also. Even if it is repaid, even if you pay interest, still the loan provided by a closely held company or a company in which public are not substantially interested to a 10% shareholder will be treated as deemed dividend. Question number 4. An enterprise engaged in the manufacturing of steel balls discontinued its activities and decided to lease out factory building, plant, machinery and furniture from 1/4/2020 for a consolidated rent of 50,000 per month. So, rent of building is individually not known, consolidated is there, so it is taxable under IFOS. Compute the income from the following information. Interest it has received from deposit, brokerage on loan, interest paid on loan taken which were given as deposit to interest of others. So both these things can be claimed as deduction from this 1 lakh. Expenses on repair of building, plant and machinery, fire insurance premium, depreciation, legal fees, factory license fees paid, unabsorbed depreciation brought forward. Read through. and furniture. Lease rent received is 50,000 per month for 12 months. Repairs 15,000. Fire insurance premium 12,000. Depreciation 147,500. Legal fees 1,500. Factory license fees 1,000.
Sir, is it like the law encourages assessees to split their rent as to what it is specifically for? Because otherwise, the assessee has to take depreciation only under this section. If not, he could have taken the benefits of deductions of all the things in depreciation in PGBP, no, sir?
Okay, I broadly understand your doubt. The depreciation here is also computed as per section 32 only. It is not that depreciation can be claimed at any rate if it is IFOS. Everywhere, wherever the law says depreciation, they will say it is as per 32. Now, if I understand your question in a different manner, sir, is that the law encourages building rent to be declared under IFOS, because if I declare it under IHP, I can only claim 30% standard deduction, whereas if I do it here, I can claim all expenses. Remember, it should be a business building to claim this expenditure. If it is a domestic asset, house property which has been let out, and I wantedly ensure that I let it out along with furniture and does not split it and bring it to the IFOS, you cannot claim any expenditure except for the furniture depreciation. This is business. So all these securities charges, etc., and other things can be claimed.
Okay, sir.
Can unabsorbed depreciation be claimed as deduction?
Yes, sir.
Sir.
As simple as this, okay? As simple as that, you should not even worry of claiming unabsorbed depreciation. You all know the provision, okay? Unabsorbed depreciation. This can be claimed against any income. So never hesitate to claim, okay? Question number 5. In July, Mr. Parvas, employed as a marketing manager in a pharma company, received a Maruti car as a gift. The value of car gifted is 260. Is the car taxable? If so, under which head?
So won't it be a perquisite for the company? I
No,
mean,
sir. It is winning, sir.
sir, can you explain in what context it is considered as winnings?
Gift. Sorry, it is not winning. Sorry, I misunderstood. That is, he is winning in a competition. I misunderstood. I'll answer this question. Please wait. I'll answer this question. I'm sorry. This goes to gift. I will come to that. He is right. It is to do with gift. I will come to gift provision and answer this question. I initially understood it as some competition winnings in kind, but wrong. He is right. So I'll come back to that. After reading gift, I'll come back to that. Question number 6. Rupali furnished the following details for assessment year 22-23. Agricultural income from India, agricultural income from outside India, rent of vacant land, rent received on subletting, rent paid on subletting, allow this as deduction. Maintenance expenses of subletting, you can allow. Directors' sitting fees, interest on National Bank, interest on Postal Savings Bank account, interest credited on PPF account. This is always exempt. PPF, RPF. Okay, this is exempt. Interest accrued on NSC, interest on HDFC, interest on other securities, dividend from companies, interest paid on money borrowed to invest in shares of that company, bank charges paid for above dividend, dividend from foreign company, interest paid on money borrowed to invest in foreign company, lottery winnings, net of tax, cost of lottery ticket purchased. Compute the taxable income and tax considering the above income are the only source of income of Rupali, who is following mercantile basis of accounting. Read through. Agricultural income from India is not taxable, exempt under 10(1). This is taxable 3,10,000. Ground rent, that is rent of vacant land. This is per month of 12,000. This is per month of 12,000. Rent received for subletting of property 37,500 less expenses, assuming no other benefit is claimed. Expenditure, assuming that assessee has not claimed any other benefit. Assuming that the assessee has not claimed any other benefit. Now you will wonder, what is that the assessee has not claimed any other benefit? Assessee should not have claimed the HRA. Assessee should not have claimed this rent as an expenditure. When you are claiming it as an expenditure under PGBP, don't expect it to again be provided as a deduction under IFOS. I took a space for my office. Part of my office I am unable to use, so I let it out to a lawyer or another chartered accountant to occupy that particular space, and I am receiving rent from them. That is known as rent from subletting of property. For the whole office, I am paying rent to the owner. This, if I have claimed it under business or profession, for the whole office, if I have claimed it under business or profession, again don't claim it under IFOS for this particular portion. Or I take a house on rent, I claim HRA. Part of the house I am letting it out for my friend. I get the rent. The rent received from subletting is taxable under IFOS. Now you cannot claim the rent paid for that particular portion, because for the whole house I have already claimed HRA. So that's why I am writing assuming no other benefit claimed. You can take a assessee favorable approach, but you should have this words. Is director's sitting fees taxable under salary or IFOS?
IFOS.
Why?
If it is not taxable under a salary, it is taxable under IFOS.
Super, Ankush. Okay, safe answer. But still, I want to persist on the question. Is it taxable under salary or IFOS?
IFOS.
Why?
Specifically in section la kuduthirukanga sir, sitting fees over.
I take that answer. It is specifically given under IFOS. So I am taxing under IFOS is our friend's answer. Second, between the payer and receiver, no employer-employee relation. This is not for employment. This is for attending board meeting.
Moreover,
Just for
if he attends only, he will get it actually.
If he attends only, he'll get it. Very good answer. Okay, it
Correct.
is only for attending board meeting. If he attends only, he will get it. So it is nothing to do with employment. So it is taxable under IFOS. That is the logic. Vaguely, you recollect something else which I asked you to remember with regard to director's sitting fees? Very vaguely. I know it is very difficult. PGBP, I was just passing through that section.
Sir, it is taxable under even receive 1 rupee. That is.
I'm happy with your answer, Venkatesh. That what I said is TDS is applicable and there is threshold, no threshold limit.
No threshold.
194J TDS is applicable for this 3600. You need to deduct 360. Threshold is nil. I'm happy with that answer. We will see that in 194J. But whenever it comes, we are trying to put it into us. Director sitting fees taxable under IFOS. It comes under 194J. Threshold is nil. Now coming to interest. Interest on deposit 21,000. Exempt, that's enough, don't worry. Dividend received from Indian companies 11,22,000. Interest on loan taken for investment will only be allowed. Collection charges will not be allowed. Remember, collection charges will not be allowed. Interest on loan taken for investment will only be allowed. That too, there is a restriction. That too, it is not a blanket deduction. There is a restriction. What is that? Interest paid is 2,18,600. 20% of dividend okay, whichever is less will be allowed. dividend from foreign companies dividend from foreign companies 131 100. Yes. Okay. Interest paid 18,600. Here I need not look into any limitation. Only for Indian companies the limitation is for foreign company dividend. Even collection charges will be allowed because obviously you will be incurring some collection charges. $70,000 plus $30,000. Expenses or losses will not be allowed. Gross total income. Deduction under section 80TTA. Okay. Savings bank interest. Actual interest from savings bank, from savings account, I am receiving 31,200. It can be with bank or post office, don't worry. Maximum deduction 10,000. So whichever is less, I get 10,000. Total income 17,04,250. 17,04,250. Agricultural income from India. We all know it is exempt under 10.1, but it will be used for aggregation. So I am writing it here because the question has asked us to compute tax also. Computation of tax. Computation of tax. Please wait. Let us do together. Okay. Computation of tax. In that, income taxable at special rates 115B winnings we all know is 1 lakh. We all know this is 1 lakh. The segregation is essential. Income taxable at normal rates is 17,04,250 minus this 1 lakh. 1 lakh taxable at special rate. Okay, the other, so it is step 1 income taxable at normal rates plus agricultural income 1604,250 plus 304,800. Income taxable at normal rates plus agricultural income of 3,04,800. Step 2, tax on step 1. Okay, the formula goes like this: tax on step 1, 19 lakh 9,050 minus 10 lakhs into 30% plus 1 lakh 12,500. 9 lakh 9,050, 9 lakh 9,050 into 30% plus 1 lakh 12,500 plus 1 lakh 12,500. 2,50,000 plus 2,50,000 plus 3,04,800. On that, the tax 5,54,800 into 20% plus 250 into 5%, that is 12,500. I'm getting a total tax payable of 4,07,425. Check it out, please. 4,07,425. Progressing to the next important head. Well, my dear friends, in the last 3-4 papers, okay, there was not much of question. But before that, very sure short question. That's how the gift provisions were interpreted. Okay, it was something like a sure short question before, but fortunately now it is not very, but still I feel it is important to understand. It can be an adjustment. It can be an adjustment. So what about taxation of gift? What about taxation of gift? When this provision was introduced in the initial period, it was only for individuals and HUF. Now they have removed it. It is for all assessees. However, for charitable trust, because charitable trust, everything is donation only. Everything is a gift only. It is not applicable. Otherwise, for all assessees, it is applicable. I hope I'm audible, friends. Mute only.
Yes, sir, you're audible. I am able to hear you.
So, available for all assessees, applicable for all assessees. Both monetary and non-monetary gifts are taxable. Gifts of both monetary and non-monetary. Non-monetary gifts are split into two, movable, immovable. Repeating, both monetary and non-monetary gifts are taxable. Non-monetary is further divided into two, movable, immovable. For immovable property, stamp value will be treated as value of gift. Shall I repeat? For immovable property, stamp value will be treated as value of gift. For movable property, let us first understand what is a movable property. Jewelry, work of art, architecture, painting, shares, securities, and foreign currency. Shall I repeat? What are all the types of movable property which are to be included? Jewelry, work of art, architecture, painting, shares, securities, and foreign currencies. These are only to be included. These are only to be included. So, if I gift a refrigerator, television, car, the value exceeds 2,50,000, still it is not taxable for the receiver because it is not a specified movable property. Because it is not a specified movable property. Shall we again say movable property includes jewelry, work of art, architecture, painting, share securities, foreign currencies. We can relate it to a capital asset. all movable personal assets are not capital asset except jewelry, work of art, architecture and painting. Same way, taxable provision, all movable property in the nature of jewelry, shared securities, work of art, architecture, painting and foreign currencies. The following gifts are not taxable. Gift received from any relative not taxable. On the occasion of marriage not taxable. Inheritance through a will is not taxable. This is also will. From a local authority not taxable. From a charitable institution or from any other types of institution not taxable. Shall I repeat? Gift received from relatives not taxable. On the occasion of wedding not taxable. Inheritance not taxable. Death of donor, inheritance again, and all types of charitable funds are not taxable. These are charitable funds you will study in when we come to assessment of charitable trust. Gift on the occasion of marriage of the individual. Law has again and again clarified Mr. X gets married. Any gift received by Mr. X on the occasion of wedding is not taxable. Any gift received by Mr. X on the occasion of his wedding is not taxable. Mr. X's son is getting married. X's daughter is getting married. X is receiving gift. It is taxable. X's son or daughter is getting married. X is receiving gift. It is taxable because the law says on the occasion of the wedding of the individual, of the assessee only it is exempt. Assessee gifting gift on the occasion of wedding of any other person, the exemption provision will not apply. Somebody was asking. Next, the first point, gift from relatives. Who is a relative? All first line relatives. All first line relatives. Spouse, brothers, sisters of the spouse, parents, brother, sister of the parents, lineal ascendants, descendants, son, grandson, father, grandfather, and brothers and sisters of the parents also, their respective spouse. Up to this point, please read it once before progressing. So shall I sum up to this point? Gift is taxable for all assessees. For all assessees now. Then for the purpose of this chapter, gift is divided into three: monetary, immovable property, movable property. Gift, monetary gift, gift of immovable property, gift of movable property. What is a movable property? Movable property is not everything. It is only restricted to jewelry, work of art, architecture, painting, share securities, and foreign currencies. What type of gifts are not taxable? Gift from relatives are not taxable. Gift on the occasion of wedding of the assessee is not taxable. Gift through will is not taxable. Gift if it is received from a public charitable institution, recognized institutions, it is more like a scholarship, so it is not taxable. It is more like subsidy or scholarship, so it is not taxable.
So just a small question.
Yeah.
So I'm getting married. I'm getting gifts. I won't be taxed, but I am gifting it back to my father. He'll
It
be
won't be
taxable.
taxed.
It won't be taxed. So this is what we can do. Like this is
It
something.
won't be taxed.
Okay.
Yeah. Now coming back, gift from relatives. Who is a relative? All first line, cousins, nephew, niece, இவங்கெல்லாம் included கிடையாது. Assessee and spouse, if you look at together, brothers and sisters of them, their respective spouse. Brothers and sisters of parents of the respective people, their respective spouse. That's all. Then father, grandfather, great-grandfather, son, grandson, great-grandson, daughter, great-daughter, like that. Lineal ascendants, descendants of both individual and the spouse. Years back, provision was introduced, 10 or 15 years back. They understood the way of living has changed. They understood way of living has changed. The culture has changed. So, lineal descendants of individual Tanya, spouse Tanya. It was very, I remember it was very much objected. How can lineal descendants or ascendants okay? How can lineal descendants of assessee and spouse be different? No. The income tax department clarified, if a person marries another person who already have a child, then the descendant of the spouse might be different. So, இது வந்து 1961 to 2000 provisionல இருக்காது. So, this you can see this as the subsequent provisions. Now, let us come to what is taxable. Monetary gift. If the aggregate value of gift exceeds 50,000, excess illa, the whole of the amount is taxable. Aggregate gift from non-relatives exceed 50,000. Aggregate gift from non-relatives exceed 50,000, whole of the amount becomes taxable. Three persons, each donating me 20,000. Now the aggregate has exceeded 50. It is totally 60,000. Entire 60,000 taxable. It is not donor based, it is receiver based. Each donor might have given less than 50,000, but the receiver has received it more than 50,000. Whole of the amount becomes taxable. In the case of immovable property, stamp value is the basis. And if the stamp value exceeds 50,000, whole of the value is taxable. If the stamp value exceeds 50,000, whole of the amount is taxable. So what happens? Land, the value is 5 lakhs. Is it taxable if it is gifted? Yes. Consideration paid was 10,000. Originally, the law never had a provision. So people paid 1 rupee, 10 rupees, 1,000 rupees, 10,000 rupees as consideration, because gift means without consideration. If I pay consideration, it is not gift. Adu one. Contract law is saving us by saying consideration need not be adequate. So people were escaping from this provision. So came a concept called inadequate consideration is also gift. What is inadequate consideration? Difference between stamp value and consideration paid is known as inadequate consideration. Difference between stamp value and inadequate consideration means difference between stamp value and consideration paid. If the inadequate consideration does not exceed 50,000, nothing is taxable. Where it exceeds 50,000, then also I have an exception. In exception, the 10%. 43 CA and 50 C, when we are reading, we know 56 to 10 will also come as an exception. If the inadequate consideration exceeds 50,000, but the difference between them is only up to 10%, then too the inadequate consideration is not taxable. Okay? Where the inadequate consideration exceeds 50,000 and also 10% of stamp value, then the entire inadequate consideration becomes taxable. Shall I repeat? Inadequate consideration means difference between stamp value and consideration paid. And the difference less than 50,000, forget it. Don't check 10% and all, forget it. That difference is more than 50,000, then also check. The difference might be more than 50,000, but the difference between stamp value and actual consideration is not more than 10%. Minor difference, leave it. Or 5 crore property ke 10% is 5 lakhs. If the difference is 4 lakh, it exceeds 50,000, but it does not exceed, the variation is just 10%, then also leave it. If it exceeds 10% and the variation is more than 10%, I mean, if it exceeds 50,000 and the variation is more than 10%, then the whole of the inadequate consideration, whole of the amount, whole of the inadequate consideration becomes taxable. This is a small provision. If it is a residential property and it is purchased before 30th June 21, I don't think there will be a question, and the consideration does not exceed 2 crores, then 10% will be substituted by 20%. This we saw in 43 CA also. This we saw in 43 CA also. I don't feel there will be a question, but still we will have it in our mind. For movable property, what is movable property? Includes jewelry, work of art, architecture, painting, shares and foreign currency. Fair market value will be treated as gift. If the aggregate FMV of the property exceeds 50,000, then the whole amount becomes taxable, and same inadequate provision. If the difference between FMV and consideration received does not exceed 50,000, then nothing is taxable. Where it exceeds 50,000, inadequate consideration, difference between FMV and consideration paid, then entire amount is considered. Then we all know about this date of stamp duty. Advances paid through approved modes, agreement, date of agreement. Where advances paid through unapproved modes or no advances paid, date of registration. Once read it, I will again sum it up. Once read it. To sum up, gift is divided into 3. Monetary gift. If the aggregate value from non-relative on the occasion other than on the occasion of marriage of the assessee and other than from recognized institutions or will exceeds 50,000, then the whole of the amount is taxable. Gift of immovable property, stamp value will be considered. If the stamp value exceeds 50,000, it becomes taxable. Difference between stamp value and the consideration paid is known as inadequate consideration. Inadequate consideration exceeds 50,000 and also 10%, then the whole of the inadequate consideration is taxable, otherwise not taxable. For movable property, fair market value, if the aggregate fair market value exceeds 50,000, taxable. Or if the inadequate consideration, which is the difference between fair market value and consideration paid, exceeds 50,000, such inadequate consideration is taxable. Movable property includes jewelry, work of art, architecture, painting, shares, securities, and foreign currencies. For stamp value determination, these are all the bases which we have seen in 43 CA, 50 C already.
Sir?
Solunga, Sudha.
Sir, for this movable property, the entire amount of consideration paid is taxable or the entire amount of inadequate consideration is taxable?
Inadequate consideration.
Okay, sir. Thank you, sir.
Consequential amendment. Consequential amendment. Gift received, okay, or land. Gift received from father. Is this taxable?
No, sir.
Yaar Venkatesh tana no sonnadu. Venkatesh, this
Sir?
is not taxable. I agree with you.
Okay.
Now, in this case, if the subsequently I sell, what is the cost of acquisition?
As per Manjula Desha case, previous owners consider பண்ணணும்.
இல்ல as
As
per
per
law அதான் மஞ்சுளா ஜெஷா
Okay.
டினாமினேட்டருக்கு மாத்திரம்
okay. Gift receive பண்ண ஏது
COA
actually
of
associate
the
received
previous owner. Cost of acquisition of the previous owner.
owner.
Okay. Cost of acquisition of the land. Gift received from friend. 5 lakhs. Taxable.
Taxable, sir.
Now I am selling it. What is my cost of acquisition?
Sir, I can't hear you, sir.
Now I am selling that land. What will
Okay.
be my cost of acquisition?
Cost of previous owner, including?
So, இப்போ ஒரு எக்ஸாம்பிளுக்கு சொல்றேன். If the previous owner has purchased it for 2,50,000,
Okay.
already you have taxed 5 lakhs.
Okay.
இப்போ subsequently when you are selling, you take the cost as 2,50,000. What happens is the difference of 2,50,000 gets twice taxed.
Okay.
One at the time of gift and second at the time of subsequent sale.
Sale. Okay.
So came the concept, thank you, Raja. So came
Okay.
the concept of consequential amendment. Here, COA will be FMV on the date of gift. In this case, COA will be FMB consequential amendment. ஒரு provision introduce பண்றதால, just because I am introducing a provision, because of this, in consequence of this, I have to amend another provision. Consequential amendment. Just because I am introduced, normally gift is not subjected to capital gains. So for the donor, taxation not arises when the receiver subsequently sells cost to the previous owner. No doubt about it. Then I am amending section 56 to 10, saying if gift is from a non-relative, it is taxable in the hands of the receiver. If gift is from a non-relative, it is taxable in the hands of the receiver. It is equal to, I gave 5 lakhs and got this. It is equal to, I gave 5 lakhs and got it. So the law says, whatever has been already booked as your gift value, take it as cost of acquisition. Whatever has been already booked as gift value, take it as cost of acquisition. That is, as if you purchased that, not received it. IFOS like gift. The consequential amendment that went into capital gains is, wherever gift is from a non-relative, take whatever value you are taking it as gift as the value of purchase, and from that date calculate indexation, or from that period calculate the holding period. It is popularly known as consequential amendment. One provision gets amended because of a change in another provision. So remember this. When we do a question, you will understand it much better. Consideration received in excess of fair market value of shares. It is when you are issuing shares. When a closely held company is issuing shares, disproportionate premium. கண்ணா பின்னான் பிரீமியம் வச்சாங்க ஸ்டார்ட் அப்ஸ்லாம். Okay, where the consideration received from issue of shares by a closely held company exceeds the fair market value, then such excess will be taxable in the hands of the company. Fair market value either under discounted cash flow method or net worth method. Okay, not applicable for venture capital fund companies. Question number 7. Mr. Arun, a dealer in shares, received the following without consideration during the previous year from his friend Praveen. Cash gift, gift of foreign currency, plot of land in Faridabad on 1st July, the stamp value of which was 5 lakh on that date. Praveen had purchased it in April 2009. Apart from the above-mentioned transaction with Praveen, Arun also purchased from his friend Aishwarya, who is a stockbroker, 1,000 shares of X Limited at 400 on 19th June. Fair market value on that such date is 600. Arun sold these shares on 23rd June. On 1st November 2021, Arun took possession of a building booked by him 2 years back for 20 lakhs. The stamp value of the building on that date is 32 lakhs and on the date of booking is 23 lakhs. Arun has paid advance by account payee check. On 1st March 2022, Arun sold the Faridabad land for 7 lakhs. Compute IFOS and capital gains. Read through. Computation of income from other sources. Arun is a dealer in shares. Received the following without consideration from his friend Praveen. received from Praveen. Monetary, it has exceeded 50,000, 75,000. Movable, it has exceeded 50,000, 60,000. Immovable land from in Faridabad, 5 lakhs. Shares received from Aishwarya. All of us, please focus. Arun is also a share dealer and Aishwarya is also a share dealer. Hence, what has been transferred is stock in trade. What has been transacted between them is stock in trade. Gift provisions will not apply for stock in trade. Jewelry, work of art, architecture, painting, shares, securities, bullion. But here, the shares are stock in trade. When Arun subsequently sells shares, cost of acquisition will be the price paid. Difference between sale value and cost will be taxable as business profit.
So the question mentions specifically that purchased from his friend Aishwarya. What if this was his personal purchase and sale of shares, sir?
Look
How do
at
we know?
this. This is the most important. Not purchased from his friend Aishwarya, who is also a stock dealer.
Yes, sir. But even if Arun himself being a stock dealer, if he has to make purchase and sale of shares, he has to also do it from another stock dealer, no, sir?
Yes.
So I'm asking what tells us that this is business and not his personal.
If Arun receives shares from a friend who is not a stock dealer,
Okay.
he is not
Okay, sir.
buying, he is receiving.
Okay, sir.
Similarly, Arun receives shares from a stock dealer but does not use it for his business, using it for his personal purpose, personal investment. In those cases, it will become taxable.
Okay, sir.
Purchase of building. Actual consideration 20 lakhs. stamp value on the date of booking agreement, okay, as advance has been paid by approved modes. Stamp value on the date of agreement 23 lakhs. 110% of actual consideration. Difference between stamp value and actual consideration. Okay, now understand, difference exceeds 50,000 and, okay, stamp value is more than 110% of actual consideration. Hence, the whole of the inadequate consideration is taxable. Difference exceeds 50,000. Difference is 3 lakhs. And also it is more than 10%. So the entire 3 lakhs becomes taxable. Computation of capital gains. Full value of consideration of land sold. Of more clearly, Faridabad land sold. Full value of consideration of Faridabad land sold 7 lakhs. Less cost of acquisition. I'm writing here, normally in case of gift, it is the cost of previous owner. However, where the gift becomes taxable, when it will become taxable from a non-relative, it will become taxable. Then the value declared as income will become cost of acquisition. Will become cost of acquisition. The value declared as income will become cost of acquisition. Okay. Classification will be from the date of gift. Classification will be from the date of gift. So here I have declared a value of 5 lakhs, okay, but it is short-term capital gain because from the date of gift it is not held for 24 months or more. Harihara Prasad, a property dealer, sold a building in the course of his business to his friend Ashok, a automobile dealer, for 90 lakhs on 1st January when the stamp duty was 150 lakhs. The agreement for the sale was, however, entered into on 1st September when the stamp duty was 140. Hari had received a down payment of 15 lakhs by a crossed check from Ashok
Unapproved.
on the date of agreement. Specify the tax implication in the hands of Hari and Ashok. Assume that Hari has originally purchased this property for 75 lakhs. Will your answer change if Hari is not a business is not in the business of property dealership? Read through. Cash includes everything, Raja. Sriram. Cash na physical cash இல்லை எல்லாமே. If he is a property dealer, Section 43CA is applicable. If he is not a property dealer, 50C is applicable. If he is a property dealer, 43CA is applicable. If he is not a property dealer, 50C. less cost of land. Cost of land, if Hari has purchased the property for 75 lakhs. Gross profit from business. Not a property dealer. Section 50C is applicable. That is the difference. If he is not a property dealer, 50C is applicable. Okay, less either COA or ICOA if it is a long-term capital asset. Okay, so we are not writing the values here. Okay, result will be either STCG or LTCG depending upon the nature of asset, but the other provision is the same. Tax treatment in the hands of Ashok, receiver, section 56 to 10. Section 56 to 10. Provisions of inadequate consideration. Since the inadequate consideration exceeds 50,000 and also 110%, the whole of the inadequate consideration is taxable as gift. additional added answer, which you will understand later. If you don't remember, don't worry. Note, Ashok is also liable for tax deduction under section 194 IA. That is 1% of sale consideration if the sale consideration exceeds 50 lakhs. 1% of sale consideration. We will do it in TDS chapter. Just for additional answer. Similar question is there in TDS also. You will be able to recollect faster. That's why I have written this note. So, if he is a property dealer, 43 CA, not property dealer, 50 C, and for the receiver. So, it is dually getting taxed. It is dually getting taxed. Never advisable to sell it below stamp value. Both the buyer and the seller are at losing end. Discuss the taxability or otherwise in the hands of the following recipients. The TDS is only because the seller is a property dealer, right? No, 194 IA, that seller property dealer, always principle is payer based, not receiver based. Payer is not, Ashok is not a property dealer, but still 194 IA is applicable. 194 IA is applicable if the consideration exceeds 50 lakhs, and we should be deducting tax. Discuss the tax liability or otherwise of the following consequence payment. How can someone without TDS, or I can understand the question, deduct TDS without TAN? அந்த செக்ஷன்ல சொல்றேன், அதுக்குன்னு ஒரு ஸ்பெஷல் ஃபார்ம் இருக்கு. Today there are 4 sections which are telling TAN is not mandatory. 194 IA, IB, 194 M, all these sections are going to tell TAN is not mandatory. Casual comment. Okay, not personalized, casual comment. You should have seen this case in your practice. Definitely we would have seen such a case. TAN is not mandatory in this case. We'll come to that section. Discuss the taxability or otherwise of the following in the hands of the recipient. Akhil HUF received 75,000 in cash from niece of Akhil, daughter of Akhil's sister. Akhil is the karta of the HUF. Akhil is the taxable, not a relative, not a member. For HUF, only from the member it is not taxable. If the assessee, if the donor is not a member, it is taxable. It is taxable. No problem. Okay. Okay, right? Can you quickly write? I'll keep the notes. I'll put the notes later. Can you quickly write in your notebook? 9.1 taxable as it is not received from a member of the HUF. Nitisha, a member of her father's HUF. There itself answer gets over. And they are answering this also along with this. Transferred house property to HUF without consideration, not taxable. Not considered as gift. Gift from members to HUF is not taxable. Mr. Akshat received 100 shares of A Limited from his friend as a gift on the occasion of his 25th marriage anniversary. Taxable. Only on the occasion of wedding it is not taxable. On the occasion of wedding anniversary it is taxable. Exemption will not be applicable. Only on the occasion of wedding it is not taxable. Received 100 shares as gift. The fair market value is 100 per share. He also received jewelry 45,000 from his nephew. So 100 into 100, 10,000 plus 45,000, 55,000. Please write down in your notebook. Fair market value of shares. Fair market value of shares, open bracket. It is not received on the occasion of wedding of the assessee. Fair market value of shares not received on the occasion of wedding of the assessee. 100 into 100, 10,000. 100 into 100, 10,000. Jewelry 45,000. Jewelry 45,000. Total 55,000. Total 55,000. Aggregate value exceeds 50,000. Aggregate value exceeds 50,000. Whole of the gift amount 55,000 becomes taxable. Aggregate value exceeds 50,000. So whole of the amount becomes taxable. Kishan HUF gifted a car to his son. Over here, you need not read further. Car is not an eligible or qualifying asset. So gift provisions are not applicable. 56(2)(10 will not be applicable. 56(2)(10 will not be applicable. Car is not an eligible. Movable property, only jewelry, work of art, architecture, painting will be included. Car will not be included. So taxable. No, not taxable. So not taxable. Case 1 taxable 75,000. Everything separate cases. Case 2 not taxable, relative. Case 3 taxable, aggregate exceeds 50,000. Case 4 not taxable because it is not an specified asset. discuss that liability of the following receipts in the hands of Jyoti. Gift of 60,000 from her father's sister, not taxable. Brothers and sisters of parents, not taxable. Not taxable. I hope you are working out. Not taxable. Acquired a vacant site from grandfather's younger brother, not a relative. Parents or their brothers and sisters only exempt. Grandparents or the brothers and sisters are not defined a relative. So, stamp duty 3 lakhs, consideration paid 2 lakhs. So, you know how to work out 2 lakh, 110% of 2 lakh, 2,20,000, 3 lakh, the difference is 1 lakh, exceeds 50,000 as well as the difference is more than 110. So, the entire 1 lakh becomes taxable. Write it down neatly as you understand. I will paste the answers. I'm just asking you to write down now. Received car, not taxable. You need not read it further. Car is not a specified asset, not taxable. Interest on enhanced compensation in respect of a land acquired, received 3,50,000 in the current year, which includes 2 lakhs in the last year. Please write down interest on delay in payment of compensation. Please write down interest on delay in payment of compensation is taxable only in the year of its receipt. Interest on delay in payment of compensation is taxable only in the year of its receipt. Standard deduction of 50% will be provided. Standard deduction of 50% will be provided. So, interest received in 21-22, 3,50,000. Interest received in 21-22, 3,50,000. Less 50%, 1,75,000. Take the remaining to the outer column. $175 will go to the outer column. Received cash gift of 15,000 each from 3 of her friends. 15,000 into 3, 45,000. Cash gift, inner column only, 45,000. Cash gift 45,000. Under that, aggregate has not exceeded 50,000. Hence, it is not taxable. Aggregate has not exceeded 50,000, hence it is not taxable. Total IFOS will be 2,75,000. If you total the outer column, the second transaction of 1 lakh and the fourth transaction after providing deduction is 175, 1 lakh plus 175, 2,75,000. A very simple question. Received cash gift of 4.75 from B and on the occasion of his 61st birthday, which is celebrated like a marriage. Only on the occasion of wedding exempt. And another 25,000 from C. Both C and B are distance relative. Entire 5 lakhs taxable. Entire 5 lakhs taxable. Only on the occasion of marriage it is not taxable, otherwise taxable. On that fifth question which we saw also is car. Please remember that is also not taxable. The fifth question, a dealer gifted car. I thought it is an winnings and started taxing, but then I had corrected. It is also car. Car is not a specified movable asset, not taxable. You know, the last 4 questions, whatever I worked out in gift are starting from question 7. Starting from question 7, 8, 9, 10, 10A, all the 5 questions are part of exam questions. But as I told you, not recent times, not in the past 2 years, but before that, gift is a very, very favorite area for the examiner. They keep questioning on gift. Fortunately, recently I haven't seen a question on gift, but now I am very confident that if there is a gift question, you will be able to answer. To a larger extent, you know how to apply 43CA, 50C, 56(2), how they are interrelated. Like a garland, they are interrelated, and it can be easily seen. Where there is a default, both the buyer and the seller are getting taxable. Buyer is getting taxed in 43CA or 50C, whereas seller in 56(2)(10). That is what we saw in Harihara Prasad's case and understood.
Sir, one doubt.
Go ahead.
In 10A, gift received from father sister is not considered as gift, sir.
Inga father sister irukana 10A la illiye.
Jyoti questions. No,
10
in
la
question 10, first one.
father's sister is not a gift. Definition of relative pathena, okay, brothers and sisters of parents.
Okay, sir.
But brothers and sisters of grandparents grandparents, brothers and sisters are taxable. That's why.
Okay, sir.
Okay, we start the next chapter tomorrow fresh. As I was telling, this week we will not have class on Wednesday, Thursday, but we will have class on Friday. This week, Friday we will have. Wednesday and Thursday we will not have. Thursday Diwali and Wednesday the day before Diwali. These 2 days we don't have class, Wednesday and Thursday. But Friday, Saturday, Sunday we will be having class. If somebody is going to hometown or somewhere for Diwali, please ensure to attend online at least. Okay. I hope even today the rain had stopped around 6:15. I hope tomorrow the rain is not there and I'm able to come to the institute directly to meet you. Meet you in the next class. All the best, friends. Bye.
Thank you.